Welcome to the show. Let's talk to Jeremy Lyon. He's a consultant at Hobart Capital. Morning to you, Jeremy.
Good morning.
Right, headlines. The Federal Reserve about to have a change at the top, expected by November the 3rd. Momentum at a 62-year high in terms of the RSI reading on Wall Street, making a number of people nervous. You mentioned off-air, you were talking about some cracks appearing. Tell us more.
Well, the cracks are changing, even from last week, where we had the Bank of England almost making excuses why inflation rate is going to be slightly higher than the market was expecting, or more important, as the Treasury and also the Bank of England were expecting. Well, that's going to put pressure on wages in the near future, not the medium future. So that's going to increase the inflation rate, therefore calling for a chance that interest rates may have to go up. But the real cracks are coming actually from the economy, the fundamental economy, which is the slight warnings from both Unilever and Nestle last week that their margins are slightly under pressure, that things are not predictable as they'd hoped. But the real killer was Pendragon yesterday, which is the motor market, the distributors of cars, saying things are seriously going sour and slower than they expected. And that ricochets back onto the banks and the value of second-hand market, because the real turnover of cars is not the new cars, but it's the second-hand market. It's about 3 times larger than the ordinary new cars being sold. And that's where the pressure on the banks will come through with the valuations of the cars. And these are the sort of cracks that makes market get a little bit more fidgety.
So in the summer, there was a number of surveys suggesting it's a 50-50 chance of the UK going into recession. Obviously, with the change with at the Federal Reserve, they're talking about the next person in charge. Almost certainly there's going to be a US recession because of the cyclical nature of markets.
They've had a good run.
Do you think the UK is sort of closer than we think, than most people think about going into recession?
The simple answer is that thanks to devaluation, there's been a momentum which has kept the economy blowing, because profit margins have been okay for a while. But now the real fear and also the reality of the devaluation is now beginning to affect the whole spectrum of whether it be foods or imports, or everything is really beginning to squeeze. And the pressure on putting prices up can no longer be sustained.
So 30 years ago, Black Monday.
Oh, don't remind me. Yes, go on.
Obviously, October, a bad historical month for major moves. Are you expecting a major move this side of Christmas?
Not really. I think the cracks will go on appearing.
Right.
Thanks to very low interest rates, people are still quite confident to go and borrow money, which seems extraordinary. The housing market the bottom end of the housing market's fine, but the top end, there's some really big cracks appearing and big price drops. In fact, a lot of the 2 to 3 million pounds, there's just no market at all.
Right.
There's no one there interested in it. So that's where it's slowing down very fast. And because interest rates are being supported by the central bank and they're keeping it very, very low, the confidence of the person buying the Christmas shopping, for instance, I think will still carry on. But when markets are cracking, it'll probably be something totally outside our sphere. I mean, the ruddy Brexit problem, we're going to have to live with for at least another 6 months. And it probably won't be a happy ending anyway.
On that happy note, Jeremy, thank you very much indeed.
Thank you.